We have with us Pramod Gubbi. He is Director Institutional Sales at Ambit Capital. Thank you so much, Mr. Gubbi, for joining us. You know, if I were, let's say, a small business today, if I were running a small business, there's no doubt that I have to generate cash. I have to generate cash because I have to pay X number of bribes. An inspector comes, I pay a bribe. I need a license, I pay a bribe. I need to put in a tender, I need to pay a bribe. That is one part, which is the black part, which goes into bribes. There's also, because I deal with an informal sector. Now, if I have to go and get my office painted or do woodwork in my office, the carpenter, the painter who come I'm going to pay them in cash, and they're going to give me some kacha receipt, which I might use for my returns. But this process of cash generation has to take place. It's not as if I can just say everything is going through the banking process. Do you agree that that is going to be affected now?
Absolutely. I mean, it's already affected, at least in the short term, given the amount of old currency that has to be returned to the banking system, and there is a limit on how much of the new currency you can withdraw. So to that extent, the short term, clearly that aspect has been severely impacted. Going forward, once the new currency is in the system, will these habits remain and sustain? It's you'll have to wait and see. But my sense is that there will be a significant reduction on that part as well, because there's an element of fear or a deterrent has been set in by this move, that there will be a significant portion of that which will move towards the formal banking system. And mind you, the government has created enough or done enough groundwork in terms of creating those bank accounts and putting in payment mechanisms in place for that transition to happen fairly smoothly. So while some element might continue to remain in the cash once the new currency or there's sufficient new currency in the system, I think this move will definitely reduce the overall cash economy in the country.
Interesting that you're saying that there's enough been done to open accounts and strengthen that. We know that Dhan Yojana was probably part of this process itself, and maybe that was being laid out. But there are big question marks there, that whether it has actually been done, whether bank accounts are being opened by people themselves putting in money. We've got a lot of reports, post office accounts being opened by post office employees themselves, putting in a certain amount of money, opening a Benami account so that that money keeps coming and the accounts don't get closed. We've heard that happen in Jan Dhan Yojana, but let me discount that and say that that is 10%, 90% is actual accounts. There's still a habit of using banks. Now, in the last few days when I have faced a liquidity crunch and I had not being able to buy vegetables and things like that, I've constantly been saying, do you have an account? I'll transfer the money to your account. No one seems to have it. And this is in the heart of New Delhi.
Absolutely. I mean, I think you hit the nail on the head. It's more of a habit. I don't think it is restricted to the the strata in the society or on a socio-economic basis to vegetable vendors and so on. I see in many of my professional colleagues who still haven't transitioned to that electronic payment modes, which are significantly available, especially with the emergence of technologies such as e-wallets. On the brighter side, I have seen in Mumbai several vegetable vendors having a Paytm QR code, which makes it easy for you to transfer money or transact without physical cash. And I'm sure events like this will accelerate the transition towards that mode. Thankfully, this phase or this era coincides with the development of technology aided by government initiatives such as the UPI, which will accelerate the availability of electronic payment mechanisms across strata of society. I don't think you can discount that. There will be some inertia there, but I think these sort of events will simply take people out of that inertia and accelerate the usage of electronic payments.
So So you effectively are saying that the legitimate cash part of the economy is going to go more and more into the banking, will be banked and will move through banking processes.
Absolutely. There's absolutely no doubt in my mind that we are moving into a more formal monetary economy. I don't think there's going back on that front. At the margin, perhaps there will be some parts of the society will still remain in cash, but the direction is clear.
Okay, let me give you another example. You know, in the beginning of this year, there were these freak hailstorms that took place across North India, and crops were destroyed, especially in Uttar Pradesh, parts of Rajasthan and Haryana. And we had sent out our reporters to do stories there, and the government actually gave them checks saying that here is compensation for you. And there were many small farmers who actually did not encash those checks because they said that the amount it costs me to go to the local town and spend a day, queue up, deposit that check, go again another day and take the money out. This process costs me 2 days of labor. It costs me in ticket prices. It costs me as an opportunity cost, and therefore it's just not worth my while to put in that compensation check. It is clear out there that they had no interest in being banked at all. And this is not far, this is just what, 7, 8 months ago?
Yeah, I think it'll take a while. The infrastructure is spreading slowly and surely across the country. For every such example, we have examples in places like Andhra Pradesh. We've seen, fair price shops moving into a completely cashless system, where the money is pumped in by the government directly through the direct benefits transfer route into the Jan Dhan bank account, and using biometric and iris facilities, you can actually buy your ration for the month without using a single penny of cash. But now these are at the cutting edge of the transformation, where some developed states, or rather more proactive states, are putting these systems in place. But things like these, where people are forced to look at their usage of cash, I'm pretty sure will accelerate. But at the same time, the government will have to keep pace with putting these systems in place, and then encouraging and creating awareness for people to use electronic means rather than cash. It'll take a while, but like I said, the direction is clearly moving in the right direction.
Okay, let me make a politically incorrect statement here and say that it's actually corruption which allows the urban poor to survive. And this, let me just explain what I mean there. I mean that if you are a wage worker in a city like Bombay or Delhi, you end up living in a slum, which is actually illegal. So a local goon who ties up with the local authorities takes money from you and enables your house to become either authorized over a period of time, or they leave you alone. They give you water, electricity entirely illegally because you pay a bribe. Now, this entire process actually allows urban poor to survive. It allows for a significant amount of lower-end FMCG consumption. Now, let me take a look at something like real estate. If you want to start a real estate project, you'll first have to get information as to where should you buy the land, because is it close to a new road project? Is it going to be close to a metro? So you pay a bribe there. Then you have to buy brick, sand. All of this is entirely in the informal system. So you pay cash there. You have to give bribes at various levels in the real estate process. So even before you start, you need cash. So you generate cash well before you start. You employ people. It is still one of the biggest employers in the informal sector in India. What happens to that entire process? What happens to that entire employment, entire demand, which comes from the lower end of India's population?
Yeah, there'll be some sort of a financial package which will be required to cushion the impact on the sections of the economy which get affected the most in this effect, and I'm sure the government is thinking on those lines. But having said that, this change alone hasn't been, hasn't been the only change in that direction. We've seen over the last 2.5 years, there have been several systems put in place, and I'm sure this won't be the last either. There's several other initiatives in the pipeline. We've been hearing about, ban on cash transactions above 300,000 rupees, or completely illegalizing any cash holdings above 15 lakh rupees. So I'm sure there's several more in the pipeline. All put together will help eliminate or at least reduce significantly the amount or the proportion of cash transactions in the economy. It won't happen overnight. It will have a significantly disrupting effect on the economy, to the extent there will be some permanent destruction in wealth, some permanent destruction in demand, particularly in sectors like real estate and jewelry. But there will be some transient effects on demand which we'll have to live through, and when we emerge on the other side, I'm sure we'll bounce back quite strongly. But there's absolutely no doubt that the direction in which we are headed is certainly positive for the economy and the country in general.
Okay, we had your colleague Saurav Mukherjee here a few weeks ago, and he was saying that I sense that there is going to be some sort of a universal minimum income guarantee scheme which this government will launch. Do you think that that is where we are heading now, that there is going to be a dole system which is going to be launched pretty soon?
I think it's fairly possible. Like I said, to cushion the impact on the most needy sections of the economy, you need some sort of a fiscal package, and a universal basic income perhaps ticks the box on that front. Now, the nature of that package we'll have to wait and see, but something to that effect is certainly on the annual, or at least is called for. But like I said, the exact nature of that package we'll have to wait and see.
Okay, now let me take sectoral impacts and the way you see it. I'll start off with auto. If you talk to dealers, then they'll say that a lot of cars are actually sold on cash, or at least part of it is cash, and they process a lot of cash. If you talk to dealers who operate in smaller towns and villages, then two-wheelers and a lot of that is actually sold in cash. And that's not necessarily black. It could be that a farmer actually collects a lot of cash over a period of time, or right after harvest season, when he gets cash, he goes and buys some sort of a vehicle. Do you think that there's going to be a short-term impact here? Are we going to see a slowdown in sales numbers over the next 1 or 2 quarters?
Absolutely. I think you're absolutely right. More so in two-wheelers than in four-wheelers. Four-wheelers, the percentage of cash transactions is relatively less. We're going by the sense of the penetration of vehicle financing, which is significantly higher in four-wheelers as compared to two-wheelers. Two-wheelers generally get bought that much little financing, and like you said, given the penetration of two-wheelers in rural areas and the proportion of cash transaction in rural areas, it's most likely that two-wheelers will get affected more. And like you said, it's not necessarily the black economy aspect of it. To that extent, the impact will likely to be more short-term. Now, short-term itself is a bit vague. How long is it? I don't think many people have a handle on it. By the very definition of the cash economy, it is unaccounted in nature. To that extent, analytics available are very few and far between. So, my guess is anywhere between 2 to 4 quarters. We hope it's much shorter than that, but I think at least a quarter or two we will see that impact.
Home improvement. We have been seeing home improvement as a big bet by most houses, because even if homes are not selling, there would be some kind of construction, tiles being changed, things being changed, new taps being bought. Do you think that is also likely to be hit now?
Yep, absolutely. That's pretty much in the eye of the storm if you take real estate into account, which will go into a structural change in terms of the nature in which that sector operates. home improvement or building materials are pretty much at the center of that supply chain, and to that there will be a significant impact on those. But having said that, I think the long-term effects for this sector are quite significant. This is one sector where there's been a significant portion of unorganized segment, partly again attributed to the prevalence of cash transaction, which allows the unorganized sector to prevail in these conditions. And as we move towards a more formal economy, there is a huge opportunity for the organized, branded players to take market share from the unorganized guys, and they'll tend to grow much faster than the industry because of that market share gain. So the short-term impact, absolutely no doubt. So for investors, perhaps it is a great opportunity in this short-term period to see how how much earnings fall and how much do stock prices fall on the back of those earnings downgrades. And there might be a great opportunity to get into these. Mind you, several of these have been bidded up and valuations have been fairly frothy in these names. So a bit of a correction is not too bad from an investor's perspective.
Okay, that brings me to things like cement, for instance. I know you already spoke about building materials, but cement has both the construction and then there is a government consumption, which is a big part of it. So cement, how will that be affected?
Cement is a bit tricky. Demand-wise, of course, we have seen demand has been fairly muted in recent times, although valuations have remained quite strong. There was hope that after the supply consolidation, demand will take over pricing, and that will have significant operating leverage and flow through to the earnings. Now, if the demand is sort of delayed, or in fact real estate and construction is still a more predominant portion of the cement demand, because infrastructure hasn't really picked up as much as we would have thought. So in the short term, you might actually see a negative impact on demand. The question is whether the supply consolidation will mute the impact on pricing. That is something that is not clear. If prices hold up, even in the eventuality of demand correcting, it may not be that bad for the sector, because sooner or later, the windfall of this action may flow to the government, and the government could restart its infrastructure development program, which can offset some of the demand shortfall from the real estate sector. But in the short term, we will be watching very closely as to how pricing will behave, because that can have a significant impact on earnings if the demand takes the pricing down. Our base case is perhaps at this stage there is enough supply consolidation that has happened, and as a result, with continued weak demand, we may not see that much of an impact on pricing.
Okay. It brings me to banks then, because when one talks about banks, there's housing finance is a big part of the entire retail portion of which is non-corporate portion. But when you take out, let's say, a part of the black economy, when you hit the black economy, then we all know in practical terms SMEs are going to be hit, because there is a cash portion there which operates. They operate through knowledge, information as well. Is there a danger of NPAs increasing in that space, in the SME portion?
It is, certainly. I think we've already been hearing the fact that some repayments have come to a standstill. Now, the extent to which this carries on, or how long this carries on, we'll have to wait and watch. But SMEs are pretty much at the center of this and will certainly get affected. And banks with significantly high exposure to SME loans will not be immune to it. So there is absolutely no doubt that we will see NPAs creeping up from that segment. Housing finance, again, it's more of when you're talking about mortgages and not the developer loans, mortgages, less of an NPA risk in my view, but certainly a slowdown in terms of loan growth on the annual. So to that extent, housing finance companies, or rather banks' exposure to mortgages will get affected in the short term.
Do you see real estate prices correcting at all? Because it's in some ways linked to the housing finance space altogether.
I hope so. I mean, it has to, given the sort of impact, you know, or rather the prevalence of cash transaction in that sector, and if this change is lasting in nature, we should see an element of demand destruction happening, and that will, in all probability, bring prices down alongside it, which may not be such a bad case. Prices had taken affordability out of the roof, and genuine end investors were not participating in that market. So some sort of a correction is warranted here, which can drive more sustainable demand, making houses more affordable and bring the end investor back into the market. And end investors are likely to be using the more formal banking system, which will also have a positive impact on mortgage growth for the banking and the financial system in general.
The only problem here, Mr. Gubbi, is that suppose there's a 30% growth in demand because there's a 30% correction in prices, right? Then the total loan book remains more or less the same, right?
Absolutely. I mean, if that is the math you're working with, but our sense is there's still significant under ownership of housing in the country, and given the demographics, if everything else in the economy plays out the way we are anticipating, and hopefully at some stage job creation also picks up from the government side, the longer term effects, or rather the sustainability of housing demand in the country will go much more than you know, what we were seeing, which was particularly in large cities, largely driven by speculative investors as opposed to end investors. So the math might turn out more in favor of volumes going up more than the price correction. So in the short term, you might be right. So the loan growth may not get affected. I'm talking about more sustainable long-term growth in the industry.
Right. You're talking about employment, and correct me if I'm wrong, the house view from Ambit has been that GST is going to lead to consolidation of the organized sector. They're going to gain market share, and therefore the unorganized sector, which actually employs more people, is going to be affected, and there'll be a short-term a short-term impact on employment. Now, this demonetization appears to be making another short-term impact on employment, a negative impact. So two negative impacts short-term, and as you said that no one knows how long that short-term is, appears to suggest to me that we are going to be in for a bit of a higher degree of demand constraint than we've had in the near past.
Yep, absolutely. I mean, that's one aspect that this we're waiting for this government to turn attention to. I'm sure there has been a lot of thought put into it. They were banking on the Make in India to take off and sort of offset the effect of GST and the crackdown on black money on employment. However, we all realize Make in India is going to take a while. Partly because manufacturing capacity in the country is still significantly underutilized. Until unless demand picks up to a stage where there is more need to put up more capacity, we are unlikely to see those manufacturing contributing to job creation, at least in the short term. But I'm sure the government is aware of it. We all look forward to what new initiatives on that front. And like I said, if there's one aspect that we need the government to put more attention and initiative is on the employment front and job creation front.